All right. How's it going, everybody? How's everyone doing this evening? How's your Thursday night treating you so far? Everyone doing well? Who's joining us here this evening? Who's here? And welcome, Ron. MTB, how you doing? Dave, there we go. I figured it was you. Just want to check. Good, everybody. Good to see everyone in here. How's everyone's trading week been going so far? Or how did it finish, I guess, in the end? Oh, I missed most of them today too, Dave. So not the end of the world. Reagan, how you doing? Yeah, I was thinking about that a little bit this afternoon about like my trading day today, and it was like actually something I think I'm actually quite proud of. Truth be told, like even though I missed a lot of those moves, like I caught myself, yeah, being aggressive or um like compromising on my technique and caught myself before I allowed like those mistakes to compound into something, right? So, even though I didn't turn something into like a 500 point win, to get like a 3R move or a 1R move, realize that hey, I've probably done something that's going to create an emotional reaction and then get out. I think that's important because the end result of that decision, it's kind of like random, right? Sometimes it's going to go in your favor, sometimes it won't, sometimes it'll shake you out, right? Sometimes it'll, give you whatever FOMO you could possibly ever desire. So seeing those moves sort of develop the way that they did, not really feel the impulse to like want to chase in or do anything stupid. Like it was a really good, yeah, it was a really good dopamine detox to a certain extent, right? Like I proved to myself that I was trading my system, not trading my P&L, because once I realized that I had done things that were outside of my system, I had to not take it, right? Or couldn't do it. So, yeah, I think that I'm quite proud of that. All things considered, it's been easy to get used to and expect big wins all the time. So slowing down and thinking about process first, I think let's not jinx it here, but I think probably sets me up to be more likely to get those big wins in the future. So like, yes, I took a smaller hit today, right? Let a Green Day, it's really good Green Day, but not like a monster life-changing one, which it wouldn't have been anyway. But like allowed or didn't allow that pressure to trick me into doing something that I didn't want to do. And I think reinforcing that skill, even when it sucks, is really important to go through as a trader and to kind of like test yourself sometimes. Yeah, I mean, like eventually, right? You notice that you're making a specific, like you're potentially going to make an error. So you don't want to test it, right? It's like, oh, I've got a victory here. Why risk to make things worse? Hey, Jason. Yeah, I believe you should have gotten a response here already about that. If you haven't, please let me know. But we have been dealing with tech issues since the stream ended. Let me check in a second. Anyone here got any trading questions? Anything you guys want to go over? As we start this session off here, kind of got my initial thoughts here of the day. Who wants to kind of kick us off with some questions? What do you guys have for me? And let's go from there. Jason, can I ask where you submitted your tech support ticket for this? So main thing, Dave, for the changing between time frames, like let's say that I'm trying to create binary events, right? Because if I'm saying like it's always just one gigantic time frame and the candle closes don't mean anything, then I kind of lose my ability to create my confirmation events, right? So if I don't have an event start time and close time, then that system sort of breaks down and it doesn't really work. So the timeframes exist for that reason, right? From there, it's about, okay, if I have a setup on the 2min and let's just pretend it's 952 candle closed at 804, right? Instead of at 833, I could just switch to the 3min, get the same basically repeat process, right, of that candle, see how it behaves, see if it gives me the close that I want, and then I can reset that process. The goal here, right, is to use the inefficiencies of the shorter timeframes to find those moments where the momentum is obvious and we can create structured and repeatable risk reward zones, stop loss locations, and entry triggers. So that's the purpose of it, is it gives us a repeatable process or a way that we can work backwards to accomplish our objectives. I mean, if something is happening during the day, like I'm usually the last to know about news. Like I'm not really following it. But if you see, volume like this, that's bigger than anything you've seen, for a very, very long time, you just kind of know that it's like, it has to be news. That's not normal price action. There's something that's triggered it. So at that point, I just go on X or Twitter and see if anything goes there. Walter Bloomberg usually is where I search. So I just go look at his profile. If he's tweeted something, quote unquote, market breaking, then fine. But I'm usually reacting to it from that point, right? So if it's something intraday, other stuff like economic events, they're pre-published, right? So, what time PMI data comes out is predetermined. It's published in advance, sorry. So you can find that anywhere. I use Forex Factory's economic calendar, filtered out only for events in the United States. And then I just generally try not to have anything open through orange or red folder events within that context. Yeah, binary is yes, no, right, Dave? So like it's either a strong candle or it isn't, right? It's either increasing volume or it isn't. It gives me opportunities where I have a yes, no decision. All right, who's got the next one? How long will it take to build muscle memory? I don't know. I don't know if I have an answer to that question. In my experience working with traders, it's usually like it takes like 3 weeks to like break a pattern and then maybe 3 weeks to build a new one. So from there, it's up to you. Depends on how mechanical of a process you're talking about as well, right? If you're talking about executing trades, you can build that muscle memory up probably in a week or two. If you're talking about muscle memory of like, I don't know, how to find your perfect moment of calm in a trade, that's probably going to take you years. So, yeah, I don't know if there's a very good answer to that. Someone's asking for next week, coming off of a long weekend break, how would you recommend easing back into it? Would you typically go half size? 3 day break for me, not enough for me to want to change anything about my trading. Generally, my position sizing is designed right so that if I have a bad day, it's not something that ruins my day, right? That's kind of the whole point of my risk management system. So that wouldn't really work if I needed to change it and deviate it and mix it up every other day, right? Or every couple times a month. So generally, I wouldn't do that. Pretty much, every trading day, like before every trading day, you want to have the same process in general. So, like for me, I'm always asking myself like today, right? Like, what's one thing I did well? What's one thing I can improve? What's one thing I can focus on for tomorrow? So instead of thinking about like, okay, I need to really worry about making money today or my position sizing or whatever, I'm just asking myself, what's that technical element or that technical thing that I want to put my energy and focus into? And then during my trading day, that like I try to make that my North Star effectively, right? Where that's what I'm paying attention to. So, say this previous week, my issue was that I was like not taking my wins more aggressively or as aggressively as I should have. Then the thing that I'd be focusing on, right, that following day would be closing as my P&L is increasing, right, not giving back my profits, not over trading, right, kind of creating those sort of technical triggers. And that would be the thing. So I wouldn't give myself like a P&L objective or something along those lines. I would just want to go through that process and try to keep it as consistent as possible. So that's a great question, Shirley. When you're in a candle that shoots up really fast, do you just get out or what do you generally do? I think it depends. It like I can't give you an absolute here because everything is a little bit different or each trade is a little bit unique. What I will say is that my general rule here is if I'm in a position and it makes me feel greedy or like the move's never going to stop or like guaranteed to make money or something like that, right? I get one of those types of emotional triggers from price action. My best bet long term, maybe not in the moment, but long term is to always try to get objective. And so the only way that I can get objective is for me to close my position. So in the same way, like when I'm looking at my entries, right? When I'm looking for something to pull into my entry zone, I'm looking for me to effectively find that moment where I feel calm making that decision, right? So psychologically, I'm trying to click submit at that moment of kind of like clarity. If I get an emotional trigger, right, I feel like I'm going to miss the trade, or I rush it, or something along those lines, I want to avoid clicking submit. Kind of the same thing now, but a little bit opposite on my exits, right? If I'm in a position and hey, it's behaving well, I'm reacting well, I've got that technical focus, I'm managing it, then I'm not really looking at it from a speed perspective, because speed is not something that's necessarily objectively true, right? Speed can be felt differently by each individual trader. So my objective is to just try to focus on my system. If something happens in the middle of a trade that breaks that line of focus, right, or breaks that concentration, however you want to call it, then I'm more likely to start to make emotional decisions versus logical, rule-based decisions, right? So it means that I'll hold on and maybe let a big win turn into a big loss. You guys have seen me do that before. You'll maybe not close at the optimal time. Maybe you'll add to a position. Maybe you'll ignore your stop loss, right, if it pulls back, like whatever. And we want to avoid those scenarios because I think those become the most mentally exhausting and drain the most amount of your mental capital. So if you get an emotional trigger once you're in a position that is driven by a very dramatic change in P&L quickly, your best long-term decision is to take that win, get objective, reset, regain control over your emotions, and then look for another opportunity to execute the same thesis if it presents itself. Now that's like, again, like that feeling or that reaction or that trigger is unique to each individual person. So your objective is to study that, right? Figure out why you felt that way, and then test, okay, how can I push that feeling? If this happens, okay, here's what I'm going to do next time. So I regain my zone of focus and create those data points and those areas of like expertise almost, right? Over how you behave and how you react to price action. And then you'll be able to learn to how to protect yourself from yourself and extend those windows or delay those impulsive feelings. You tend to submit a beat or two after the new 2 or 3 candle starts. No, like it's all exactly like it all just depends on how long a candle takes to pull into my entry zone, right? So if I've let's do something that's got live markets really slow, but let's just pretend, right, I'm doing something like this. I don't really care what time of the candle it's happening in. Okay, if it's like 2 seconds in, not really like it doesn't really change too much. It's more about, is it inside that price zone, right? Is it within that 10 points? And is it giving me that feeling of calm that we just described there in that previous question? So it's not really necessarily about the time of the candle. I'd say the only exception to that is if I'm at the like nearing the close. So if I was watching this, right, and we're 20 seconds ago, maybe I'd still be okay. But if, let's say we're within 10 seconds here and I hadn't quite found my entry, I'd just wait, because at this point, all my head is thinking about is that I'm probably going to get faked out when the next candle opens. So why not wait to see if it happens? Like I only got to wait 10 seconds. So I mean, torture myself for that long, but 10 seconds ain't nothing, right? So that's really all it then becomes. I would say it's more like superstition versus anything real. Yeah, Dave. So there should be still a full like coach performance tab on the DTR website. Should be all there. What else we got here? Who's got some questions? So what were you waiting for, Dave? How tight of risk were you looking for? Yeah, but what would have been deep enough? Like, what was your reference price, or like what? How far away from your stop loss were you looking? See, that's the problem, right? You don't know what you're looking for before it happens. Everything's going to be a surprise, right? So make that process consistent. I try to keep reference price always 10 points, and then try to get better than that. Like if you're getting 10 points on NQ and you're happy with your risk, what should be the difference, right? Like if it's in that zone and your risk is already tight, 8 or 9 points on NQ is exceptionally tight, and you still don't want to pull the trigger, maybe it's your position sizing, right? Like if your risk is that tight, 5.5 points, your position sizing. You need to size down to free up your mind. Reagan, I'm not really sure if I understand your question. If you could clarify that or reword that for me, I'd much appreciate that. So again, like Reagan, you're looking at this the wrong way, right? Once I've set my stop loss, right? Let's say it's 202 and my reference price, not a very good example because the range is so small, but let's say it was something like this, right? And this is still not super good. There we go. Say it looked like that, right? And my red line was my stop loss. My reference price would be, in this case, 201, right? Approximately. So I have all this space from where the current price is to my reference line to determine how I feel about the price action and how I personally feel psychologically, right? So I have all this time to wait, gather information, gather context, right? Collect my thoughts, set up my execution, create that environment where I'm prepared. And then once it's in here, I'm just trying to find that moment of calm to click execute. All right. So once we've drawn out a reference price, we have all that time from where current price is to where it's in it to gather enough context to determine if we're confident in that decision or not. So it's not really like a percentage down a candle. It will change on each individual setup. Make sense? Jason, if you're here, we've got a fix coming for you in a second, man. Who else got any questions here? I don't know, Shirley. I just trust my system, right? I'm not optimizing for a single decision. I'm optimizing for hundreds of them. So it's the next outcome, the next trade's not important. Just trusting my system. No, it's not. Based on where it is in my entry zone, right? Yeah. I wouldn't get caught up in the candle time or the time of the candle. I would say is overthinking it significantly. It should be in the coach analysis tab, Dave, but it seems like it's not loading. I'll try to get that fixed at some point here. To be honest, it's pretty low on the priority list. What other questions we have here? What else we got? Any trading questions? Anything on psychology? What have people been stuck on this week? Yeah, surely. So I think I kind of already answered this, right? How do you know when the candle is jumpy and is retesting that it'll go up? I don't know, right? I have no clue. Never on an individual trade, right? Either it's going to be a win or a loss, but I know that my math works, my setup trigger works long term, and that if I execute my strategy, then I'm going to be profitable long term. So I'm not really ever thinking about, is this a decision that's best for me right now? I'm thinking, if I make this decision 100 times, am I more likely than not by a significant margin to be green or not making that decision, right? So the actual singular outcome of that, I'm not really thinking about too much. My decision isn't optimized for that P&L. It's optimized for the bigger prize, the bigger picture, the one that's actually like significant. And yeah, I don't know, but I know that if I execute my strategy and I execute my system and I manage my risk well, and I close as my P&L is increasing, and I try to buy discounts, and I keep my risk consistent, and I'm not overthinking my entries, and I'm not overthinking my exits, and I'm not underthinking my entries and not underthinking my exits, that I'll probably be okay and make pretty good money. So that's it, right? Like, I fight the uncertainty with trust in my system, and having that trust or having that system in place, that's what makes you money. So I don't, yeah, I don't know. It's one of those things, you never know the outcome of your next trade. It's a coin flip. It's either going to be a win or a loss. So I'm not optimizing for that. I'm optimizing if I do this 1,000 times, 100,000 times, right? 1,000,000 times. Am I in a better position or not? I mean, routines are different for everyone, right? Ron, like, some people value them, some people don't. But I would generally say, if you're bringing chaos into your trading desk when you start the day, you're probably bringing chaos into your trading day by the time you finish. So, what's it take to turn trading into a career? It depends on everyone. Everyone has like a different freedom number, I would say. I'll talk about what it took for me, and maybe, that can kind of like give you some ideas. Um, my situation was a little bit unique because I worked for a fund, so I was trading for someone, was managing their money. I actually wasn't even allowed to really invest my own personal capital; could only invest in the fund. And when I quit, or when I left that job, I had just gotten my bonus, and then I had like a pretty long non-compete, so I had pretty good money saved up. And then I moved to Canada. For me, what the most important thing to do was to find a place where I could live extremely cheaply. So I ended up buying like a pretty cool loft, I guess, at the time, and lived there. And then everything I had basically went into trading. So I had 50K that I had put in, and then 50K I had set aside if something had happened. And then everything else was put into like long-term investments or into the loft I purchased. From there, it took me like maybe 6 months, something like that, to like turn it into where like I wasn't worried, or like I had survived enough mistakes at that point that I figured I was probably going to make it work. So yeah, like I would say, find ways to keep your expenses as low as possible. In the meantime, as you're building up your trading skills, find ways to remove or reduce as many of your financial liabilities. Really be careful about managing that lifestyle creep. Making that first 5K payout probably doesn't mean you need to go buy the new Lambo right away type thing. And yeah, just kind of setting yourself up in that situation. There's two battles to it, right? I think a big one is it's hard to get used to being self-employed. I think to a certain extent for people, if that's not something that you've done, that I think is something that I struggled with a little bit, and so it took me a bit of time to kind of like figure out how I actually managed my days and how I managed my time. But then, yeah, with trading, we always want to assume that it's going to happen way faster, and I think we don't set ourselves up enough where we plan for it to take longer than we think, and then be surprised when it's faster. So I would set yourself up more for that latter category and find ways to use your proof of concept funds that you make while you're trading to make your life easier when you decide to make that transition. So, Reagan, I would say, right, the goal with your risk management is to keep it consistent and to remove as much variance from it as possible. The thing to analyze there, right, in your trading is where are the like obvious mistakes or the obvious leaks that are costing you money and making you feel as if things are taking longer than they should. So I would start with looking at the trades that you clearly define as like over trading or like a B plus setup or whatever you consider to be suboptimal. How can you avoid those obvious mistakes? How much are those obvious mistakes actually costing you? And if you were even doing them 20% of the time less, I bet you'd probably feel you'd be a lot closer to passing that evaluation. So I would think about looking internally into your trading data and seeing what's there. And yeah, let that guide you into figuring out what you want to cut. I think, as a certain, yeah, to a certain extent, when you're trading and you're like trying to develop your edge for the first time, you kind of want to be like the consultants in Office Space, right? Where they're coming into the office, they're interviewing everybody and asking them like, so what is it that you do here, right? You want to be looking at your trades in that same way, like looking at each time frame that you're trading, time of day that you're trading, instrument that you're trading, and basically asking it, what is it that you do here that makes me a more profitable trader? That for me, I think would be the framework to start that approach from with. And once you have that all set up and kind of firing, I think you'll start to see that self improvement loop happen very quickly. Yeah, for sure, Dave. But last year, right, we were trading a lot more stuff that had like 20-point stop losses. So we've made our stop significantly tighter and increased our sizing as a result of that. What else we got here, guys? Any other questions? Well, I trade momentum concepts, right? So momentum is like I don't know, you want to be at the concert before the headliner shows up, right? Not after. So that's it, right? Like, yeah, that's really all it is. I trade momentum. So if momentum, I trade momentum concept. So if momentum isn't there or volume isn't there, then my trading ideas aren't really that interesting, or they're not really valid. So that's all it is. Yeah, markets aren't closed on Monday. They should be open. What else we got here, team? What else we got? Uh, no, I don't. I don't look at it that way, Dave. It's just, is it increasing relative to previous candle? Is it outlier? Well, I would say trying to force too many funded accounts at once is slowing you down, right? Like, you're trading a number that's larger than your technical ability is able to manage, and you're getting stuck on the same mistakes over and over and over again. All right. The fastest way to speed up in trading is to force yourself to slow down, as ridiculous as that sounds. But I think that's probably where you're at. You will reduce a lot of your mental anguish trading just one account, creating that proof of concept, and then growing it nicely and slowly. If every trade decision is multiplied by 3 or 4 or 5 or 10 or 20 or 50, so was the mental stress, pressure, mental capital. And those are the things that you're struggling with. So why not reduce your pressure and prove that you can do it and then scale up? So, Vince, everyone has a different pace and a different target, right, for when they want to do it. I would say that an evaluation is not as scary as you make it out to be, or maybe you don't feel it as scary, but look, paper trading is useful to an extent, but as much as trading is like something that happens on the screen, it's a game that happens in between our ears, right? So how we manage our psychology and learning from that, learning how you react to price action, your emotional triggers, those aren't things that you can really replicate in a paper trading environment. And yeah, I think the longer that you spend paper trading, it actually becomes like a little bit of a net negative, because when you then go trade to live, you've got all this muscle memory that then gets interrupted by a huge and overwhelming amount of emotions. So, yeah, I would say practice for like a week or two, and then push to live, or push to trading or eval as soon as possible. We've had 7 payouts so far. I don't know the total number of funded accounts off the top of my head, Andrew. Sorry, I only know number of payouts. Yeah, paper trading, like these are free softwares. They're not particularly well managed. Their servers can get overwhelmed. Like, it's not a very good reflection of what real trading is like. So, would you recommend trading micros for those of us who are worried about blowing evals? I would focus not on the instrument, but I would focus on your risk number, right? So, if micros make it easier for you to constantly execute under your risk number, then yes. If minis allow you to do that, then sweet. That would be the distinction that I would use. Yeah, Vince, you can watch the live stream with your coached account during your evaluation. If you'd like to continue with us after that period, we could get you set up with a conversation and see if you'd be a good fit for the team. Oh, I mean, Andrew, I'm very happy with with the number of payouts here so far. It's been pretty good, and pass rates have been really good. So have been pretty positive about what we've seen here so far from members. So it's been really positive so far. Hey Jason, let me know if you can see your funded accounts now in your dashboard. You should be able to see some activation buttons. Yeah, Dave. I think, or like I said to you earlier, like I think you need to focus on really sizing down, right? Like if you're trading 2 contracts to go to 1 even, and just find that process of that repeatable edge, right? Make like $500 a day for a couple weeks, and then increase your sizing. Like it's really strange, but everyone growing up gets like taught, don't like you got to learn to walk before you run. And then when it comes into trading, everyone thinks that they're Warren Buffett from day one and they can go full port on a position. About 2 weeks, Shirley. About 2 weeks. Any other questions here, team? What else we got? All right. Any other questions here, guys? Any other questions? Has my part slowed down at all? No, no. I've been very, very busy here still. It's been a lot of fun. It's been yeah, pretty consistent, like 18-hour days since this thing is launched, but it's starting to get a little bit more stable. So appreciate everyone's support in yeah, helping us find some bugs and things like that. Would I say March was a tough PA month? Um, I don't think about it that way too much, Dave. Like all months are tough. Like people blow their accounts in trending markets. People blow their accounts in choppy markets. I would say that in general, right, we haven't seen this type of consolidation or coiling in the market for a very, very long time, right? So the price action has been abnormal or different than what we're used to, right? Even like other periods of quote unquote consolidation, like you're looking at a couple months. This has now been pushing 6, right? So that is what's different about it all. But nice or easy price action is relative to your personal results. So it's not an objective measure of PA, right? If VIX was, 60 and every day was 1,200 point ranges and you were making money every single day, you'd be trading really well. If, and you'd say you're trading really well, right? I think what often makes it feel as if price action isn't smooth is when you go into a headline driven market, right? So that's what we're dealing with here now, because those narratives can change so quickly, right? So even though price action for 99% of the day will feel exactly like you remembered it in February or January, you'll get that one tweet or one message or one data drop, and then all of a sudden you'll get 12 minutes of chaos, and that skews your perspective to a certain extent. I don't like absolutes in language, right? So, like, if I tell myself that March was a really, really tough month to trade, or tell myself that it's going to be a really tough month to trade, it's going to be a really tough month to trade. Anything else here, team? What else we got? Okay, so someone, let's bring this up on the screen. Someone was asking, how do you track your drawdown, right? Your balance, whatever, on your account. So do this one here, right? This is your trading panel, right? Where you can see your live stats or you guys can see, you can see your live P&L per each account, right? It tells you your equity level and then your max drawdown that you can basically get towards, right? So this is your number that you need to keep an eye on if you, right, execute a position and then you close it for a loss, right? You're going to see that your drawdown is now 25 points less. And so your difference becomes this, right? So all the information you need per account can be found individually inside your trading platform. The website or like the trading hub individually, we're working on making sure that that process is smooth, but this is your source of truth for all of your accounts. Make sense? Yeah, makes sense. Any other questions here, guys? Any other questions? Well, final call here. Final call. I wouldn't use the trailing button personally, right? I don't believe in using trailing stop losses to protect my positions. My stance is you close as your P&L is increasing. If you feel like you need to set a trail to follow your position, why not close it there instead of costing yourself the extra 200, 500 or whatever? But if you insist on using it, right, you can set it to trail based on number of ticks or how far you want it to be away from the current price, a percentage or a dollar. So very similar, pretty self-explanatory. But yeah, I personally wouldn't recommend using that setting. You're better closing as P&L is increasing. Final call here, guys. Final call. All right. Well, if nothing else, team, have yourselves a fantastic long weekend here. Enjoy some family time, recharge, relax, and let's have ourselves a fantastic April. It's pretty good March, all things considered. So really looking forward to seeing what April has in store for us. It's going to be a lot of fun. So talk to you guys all on Monday. Peace.